Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, September 28th, 4:28 p.m. Eastern Time, coming to you from rainy St. Augustine Beach, Florida, with tonight's Revere Market Insight video. We are staying put for this, and I used some technical analysis to make my decision. Last Hurricane Irma, the rain quantity that fell for Irma and the storm surge are both higher than what is projected for this storm. So we rode that one out, stayed dry, and based on that, I'm feeling pretty good about it. I imagine we'll lose power, but that should be about it. Flooding shouldn't be an issue. And thanks to everybody that's reached out to wish me good luck dealing with this. But luckily, we're on the east coast of Florida. Unfortunately, the southwest coast of Florida is getting pretty decimated. If that storm hit where I am, this island that we live on would be completely underwater, and I'd be starting over. But at least we know when hurricanes are coming. Tornadoes, not so much. Earthquakes, not so much. But I still wouldn't trade it for the risks. So here we go. State of the market. Continue to be in a correction. You can see over here in the trend gauge. Leaders and the five major indexes all showing bearish/downtrend. Leaders broke down last week. The five major moving averages are all trending below their short-term 21-day exponential moving average, their medium-term 50-day moving average, their long-term 200-day moving average. As far as what happened today, we finally got the oversold bounce that I was looking for yesterday. I guess we got it yesterday at the open, but gave it up immediately. Overnight into this morning, we broke down below the recent lows, but by the open, we were positive because of some news coming out of England that they are restarting quantitative easing. So that's a head scratcher. Sounds like a move of desperation. I don't know if any of our Fed officials have been asked about that yet, but that was really so far off the radar that it was kind of shocking, but it put some confidence into the markets for whatever reason. Maybe I had been saying that we would need some sort of a catalyst. Maybe that was the catalyst. The catalyst also had the risk of causing a panic, but I guess the reason why they did it, I read a couple of articles, is that they were really having some serious financial market issues over in England, and the Bank of England needed to step in to shore up their liquidity. So strange times. We'll always revert to the price and volume action and the action in leading stocks and the indexes to take our guide. So very green today with the oversold bounce. G6 outperforming for the second straight day, up 3.44%. S&P 500 up 2%. NASDAQ 100 up 2%. Dow up 1.9. Mid caps up 2.7. Russell 2000 small caps up 3.2. Global diversified 60/40 stock and bond up 1.7. GROTECTION came in all cash, ended the day all cash. Why didn't I re-enter UPRO? There's a couple reasons. One, I wasn't sure of that I didn't trust that initial gap up this morning because of the possibility that it could be seen as a negative and desperate move, and sellers would come in. By the time we got to where that fear had passed, we were close enough to the ADMA and the recent resistance levels that the risk reward wasn't there anymore. So we decided to pass on it and just stay in cash and see what happens after this day one of positive action. We'll get to the tail of the tape and charts of interest momentarily. But first, let's break down why we do what we do here at Revere. Let me bring in my good friend, the bear market chart. This is why preservation of capital, risk management is our number one job here at Revere. You protect the downside. The upside takes care of itself by participating in the market rallies. We've got rules for getting in. We've got rules for getting out. But we absolutely will not participate in a severe bear market sell-off. This actually is a little bit worse now. It's like 24.8%. And we can stretch it from July to September. Now, whether or not that's the actual bottom, we still don't know. We don't predict. we'll let the charts and the markets tell us if it is or not. But by all costs, we're going to avoid any severe loss to our clients. These are not only does it destroy your financial capital, it can destroy your mental capital, your emotional capital, and just crossing that negativity out of your life to us is you can't put a price on it, frankly. We can quantify it, but metaphorically speaking, you can't put a price on it. So we're going to avoid these. That's what we do. We've avoided it this year. We avoided COVID. We avoided Q4 2018 for the most part. And then we participate when the markets turn back around. So here's a good, we don't want to see the VIX. We want to see the S&P 500. And this is an advantage of, this is a representation of a healthy market. An example here where we're trending higher above the short-term 21-day moving average. That's the green line. The intermediate term 50-day moving average, that's the red line. The black line is the 200-day moving average. When we start to go sideways and then roll over, we protect more and more capital. Our stops will get us out of the market. When the slopes of the lines break over, we are really starting to ratchet up the defense. When we break below the 200-day moving average, the black line, we are understanding that the market is risky from now on, and we take a completely different tact from looking to participate in upside to absolutely protecting the downside. We had a couple of false starts above it early this year. Everything changed on April 21st when we tried to get back above, failed, and then went into this free fall. Couple times we tried to recover, ended up free falling, had a decent rally which we participated in. We still have some gains from this booked, despite the fact that we're back down near lows. So you can see this 4-day consolidation here. Basically, we got to the top of that consolidation today. If you include the futures, we're actually all the way down to here around 35.50, I think it was overnight. But even with this rally, we haven't pierced any resistance levels. We still haven't gotten above the 8 EMA. We're above the 5 EMA. That's our ultra short-term indicator. I rarely put that on a chart. I did this morning just to gauge where we were, but we're still below the 8 EMA. So this is day one. We need to see more. More improvement in the indexes, but I think we've got at least a decent list of some stocks that are holding up okay. There's still about 10 to 15 holding up okay, starting to at least look like they're putting in a bottom or at the bottom or are at the bottom of consolidations. That would be nice launch pads higher if the market could right itself. And again, I know everybody's reading about gloom and doom. We're going to go by what the charts tell us. The markets look ahead after all. And one good piece of good news, all of the indexes, including the G6, are putting in this little hook higher on our stochastics. So this hook higher is very often the beginning of a move higher. You can see it happened here. A couple of false starts here. Really, what you want to see is you want to get back above this 20 level. Look how this worked. Off the lows back here, and then we had a pullback when we got to the highs, and then when the stochastics crossed back, it's bullish, and then we stayed in overbought for a while we ran higher and got into this declining 200-day moving average, our long-term indicator, and we failed there and rolled over there. And now we're looking to see, we're taking clues from price and volume and from some technical indicators to see if maybe we can get a little bit of a move higher. We went from 3 straight days of 6% above the 21-day exponential moving average, now only 3.8%. I'm sorry, below, 6% below. That was the reason for the long 2 days ago that we took minor profits on yesterday, but now only 3.8%. And this is moving down quite a bit each day, so we'll get to it quicker. First level of challenge that we need to get over is this 8 EMA, which is at around 37.47. We got a couple of technical levels that we pierced on this latest gap down. But ideally for bulls, you want to see this 4-day consolidation turn into what this 2-day consolidation was, and that is a bottom, and then start making some moves off the low. When you retest the lows, they hold. get back above the short-term and intermediate-term moving averages, put more and more capital to work, see if we can get above the 200-day moving average, one level at a time. As we conquer them, we'll get more and more involved. So that's what we do at Revere. Technically driven, no opinions, price and volume action. If you're interested in this approach, reach out to me. Dozens of people have in the last couple of months. It's really been a good quarter for Revere, both from an asset growth from new clients and an asset protection. We're still positive for the quarter for asset protection. So reach out to me, Don at revereasset.com, or Dan. He answers the phones after all, and he will point you in the right direction to answer all the questions that you have. So either Dan or Don at revereasset.com. We're the partners. We put our money where our mouth is. All of our family's money and our retirement money is in this strategy that we use. We get the exact same prices that our clients do at the exact same times. I can count on one hand the number of trades that I've taken outside of what we do for clients, and that's only because of severe illiquidity on something that I wanted to take a flyer on with very small amounts of capital. We eat our own cooking. We buy and we sell right along with our clients, no exception. So if you're interested in this approach, reach out to us. Okay, so let's go through the 5 major indexes, and then we'll go through the tail of the tape and break it down a little bit more. So here's the NASDAQ 100. Same situation, although touched the ADMA and then closed back off of it a little bit. Relative strength in the NASDAQ 100 this week, and this is despite the fact that Apple was down today on a report that they're pulling back on iPhone production. You can see we're right in this big resistance area right here, this 280-ish area. Very critical for the NASDAQ 100 to get through that. Let's look at the Dow Jones Industrial Average. You can see very similar to the S&P 500, 8 EMA overhead. Let's go to MDY for the mid caps, almost to the 8 EMA. Really the same setup on all the indexes. I like seeing that. It's consistency. Again, in small caps into the 8 EMA and pulled back a little bit into the close. So let's go to the tail of the tape now. And note the technical changes. This was in red yesterday as we had technical headwinds, but green shoots, call it if you want to. The indexes in the G6 daily from oversold, the daily oversold stochastic attempting to hook up. It's consistent across the G6 and across the 5 major indexes. So we're going to observe that and see if that can continue. Put call at 1.07 is neutral. VIX dropped 7.4% at 30, still above that 24, 25, 26 level that we keep an eye on. It's also above all the moving averages. So we need this to come off also if we're going to see the indexes work their way higher. Fear and greed at a 19, up 2 on the day, still operating under the bear case. But do note this technical change to at least neutral with the attempt to the hookup. We'll see what the upcoming days bring. So some news today. I mentioned Apple reduced their iPhone production. It was down as much as 4% intraday, cut it to a 1.3% loss. The big surprise that Bank of England restarting QE, that gave the markets a spark right before our open. A lot of Feds speaking today. Bostic said our base case is still 75 basis points at the next meeting and 50 basis points at the meeting after that. So there'll be another 125 basis points higher by the end of the year. As far as the day count went, we were down 6 days and 9 out of 11 days on the S&P. Today's day up 1. Expectations coming in were negative to neutral, again, because we're below all the moving averages. But at that -3 ATR, the result was an oversold bounce, which we kind of had been expecting. S&P 500 support held, undercut and reclaimed this support level overnight and closed right at this in this R1 range, this 37.15 to 30. We got this fib overhead at 38.15, which is a huge area. NASDAQ 100 above R1 here. 280 is another level, intermediate level here, and then this big fib level that we played ping pong at a couple of weeks ago, or maybe even last week. So above R1. So couple positive developments there as far as the expectations and the support levels. We put in the low a day pretty quickly. Let's go to a 5-minute chart on the S&P 500. So you can see here, opened up 0.25%, immediately sold off with this 3640 area. Note this 3640 to 3645 area. It was support here, broke here, resistance on the bounce up, broke through it yesterday, pulled back, closed back below it, couldn't hold it, got back above it this morning, pulled back to this 3640 area, and it held, broke higher, pulled back again, and it held. This was the key level right here. This was the 3646. So this 3640 to 3645-ish area, when we held and then we took off, made a higher high. And then we just started chopping higher, put in a little base here, and then broke out of that, little cup base intraday, broke out of that, ran up into highs, a little too far, too fast there, pulled back into the close. Let's go to a 60-minute chart. Let's go to a 30-minute chart first. So overhead here, you can see this 3750 level. That's a pretty big area of resistance. It was the last support level before the gap down. This high over here on the left side of this 4 or 5 day consolidation we're in right now, 37.27, tried to poke back above it, back below it by the close. So 1, 2, 3, 4 days here, island bottom. We need to get back into this range, and then you can see this 3780-ish to 37. 37. Let me try that again. 3800 to 3827 area. Brain works faster than the tongue sometimes. Again, one level at a time. So back to daily. Back here, what was up today? 11 out of 11 sectors. Bonds with a big move. They were due for this. Let's look at 0TNX just getting too extended. With this acceleration, big down move, 6.5% on the 10-day now. But all it did is come back to the ADMA, which has been supporting this move up the whole time. So we want to see what happens in the next couple of days in this. Also, UUP, the US dollar, big move down 1.3%, still above the ADMA. So just got a little too far ahead of itself, those two things did. We needed them to do what they did today in order for stocks to go higher. So check on all three of those. If the markets didn't go higher with them acting like that, I would have suspected we'd been really in trouble on the markets. But first day up, we'll see what else comes. Oil is extremely strong today. Gold and gold stocks up, coal stocks up, biotech up, Biogen, BIIB. Let's talk about individual tickers. Good reports from an Alzheimer's trial, and don't we all want good reports from Alzheimer's drugs? Yeah, so up 39%. They've had, let's go to a weekly chart. You can see they've had big moves in the past on similar announcements, and they all fizzled. So let's see where this one goes. I mean, we were as high as 468 on this. The stock is at 276, so still 40% below that. Need some more information before we can get excited about that. And that's why biotech was up. On the downside, VIX, UUP, and CTAs. Now, what is CTA? There are 3 ETFs that I've been looking at. This is something new. I've been reading for years about managed futures and how they can help dampen volatility. Basically, it's trend following on a commodity basis, translated to the rules. I think were developed from commodity traders. They can apply them to the indexes. It's the same type of rules, and it's trend following. If X, then Y. If then else. Anyway, they've been trending higher. There's been 3 of them. These ETFs. The first one is CTA. It's been trending higher the entire time the market's been coming down, but then you see the big negative reversal yesterday and a gap down today. This one's fairly thin at 115,000 shares a day. They do create and destroy them as needed. However, so that's not as big a concern as it normally would be. KMLM is another one. Averages even fewer shares a day, seems to trade a little bit smoother though, but you can see this nice cup and handle that it broke out of, but the big move down today, 3.19%. And finally, probably my favorite from a liquidity standpoint anyway, DBMF. broke out of a long cut base, down today 2.14%. So these are things that are just continue to trend higher while the markets pull back, because it's just pure trend following. Something we're considering adding more arrows to our quiver, because we're always looking to dampen volatility here at Revere. So anyway, those were down today after as many up days as the market recently had down days. Focus is still on shorting bounces into resistance unless we can get some strength back above the moving averages. All cash, no trades today. Bottom line, oversold bounce, stochastic hookup, but we've got the ADMA overhead on the S&P 500 and the QQQ. That's exactly what we want to see break to get the bulls more emboldened that this was more of just a one-day bounce. So here we are at 37.19 into this 37.15 to 37.30 support area that we broke below on 9.23. This was big support from late June and July. Broke below it on 9.23, closing right back in this area here. We got as high, as I said, as 37.37 today, so broke above it, but closed back inside this range. So today's high of 37.37 will be a benchmark to get across, and then you can see all of the resistance ahead that we we were all the way up here a couple of weeks ago, and then one level at a time you break through it, or stops get hit, we get taken out of the market, and sometimes short, sometimes hedge, but that's how we do it here at Revere, paying attention to what the market is telling us and reacting accordingly, not going by our opinions. So that's going to wrap it for today. Again, as always, feedback, Don at revereasset.com, Dan at revereasset.com, or phone 855-REAL-WEALTH. That's 855-732-5932. Always remember, it's not how much you made in the markets, it's how much of that you can keep. Don't let your nest egg get destroyed by an idiot advisor that has, I can't decide which phrase I like better, unconscious incompetence or willful ignorance. Some of them just don't know, others know, but they don't care. Don't let one of those advisors be your advisor. Give us a call at Revere. If nothing else, you'll be able to sleep better at night knowing that your downside's protected. So thanks for listening. Wrapping up Wednesday, 9:28. I'll probably lose power tomorrow. I'm not sure how we're gonna, or what we're gonna do for the video tomorrow. Maybe Michael, it may be me. I do have battery backups and cell backup. At some time, all the cell towers go down too. So wrapping up Wednesday, 9:28. This is Don Vandenbord telling it like it is. Just the facts here at Revere. Thanks for listening and have a great day.